So what is up, guys? Welcome back to another market recap. So today was a really nice day. I am learning something new today, and I also took one win. So I'm ending this week green for the first time after a lot of months. So basically, to this week, I'll show you all my executions of this week. So I basically took just this week starts at 27, right? So basically, I took one win, two win, three wins, one loss, and this is a really mistake loss, not my setup as well. So this is a pure loss. This has nothing to do with the plan or anything. So one, two, three, then one break even that could have been win. That's also a win again. Okay, this break even should be a win. So three, then this one four wins. Four wins. Today I took a long on Nasdaq, aiming for the London Ice. I'll get back to it. So basically four wins this week and one unnecessary loss. And then how many setups did I miss? I mean, how many setups played out? A lot. Minimum five. Today itself, I had two setups that played out, but I couldn't enter. Okay, I couldn't enter in the sense I was just tape reading one setup, and then the other one I was actually busy watching a video. So I'm basically learning CRT, candle range theory, which aligns very well with AMD. It's almost what I'm doing already, but adding CRT perspective to it makes it well. So imagine there's a 50-minute fair value gap, and the third candle is a consolidation candle in a fair value gap. Basically, it's a CRT in itself. 15-minute candles CRT would be 1 minute. So basically, it's just that simple. You are just seeing the fractal nature of price. So basically, the 15-minute fair value gap or a 30-minute fair value gap or 1 hour fair value gap working could be a CRT in the lower time frame on that candle on that CRT on that third candle of the fair value gap. So let me get straight into today's recap. So gold. So one thing I wanted to be really strong going forward in trading is drawn liquidity. So basically, any concept, any entry time frame, any entry pattern, any narrative, any anything works as long as the drawn liquidity is correct. So basically, what we want to be sure before entering any kind of trade is drawn liquidity. If we have drawn liquidity solid, then our trades are gonna work out very good. So drawn liquidity is what that gives me a bias to take a trade. So my drawn liquidity for gold was the previous day loss. Actually, I left gold to do whatever it wants to do. I just forgot it completely. Let's see what gold did. Took that previous day low. See. So basically, my drawn liquidity on gold was taking previous day low. Silver same. Yes. I wanted to see this. There was a daily candle. Let me show you that. So basically, on the higher time frame, on the daily time frame, I had this daily candle right there. Okay, price swept it, and I wanted to see push low to the 50% of that. Okay, sweep and then push lower. So that's what I wanted to see today coming into the market. And similarly in the US 100, I wanted to see price kind of swept here itself, but I wanted to see price come lower into this 4 hour fair value gap or something, a rebalance. But what actually price did, and I took this entry as well. Let me explain you that entry. So basically, London lows were taken. If I go into 4 hour, there's this 4 hour. There's this 4 hour. Okay, let me mark this out properly. We have this 4 hour candle. So coming to the 50 minute, okay, we basically have this 4 hour candle. I think that's from 2 to 6 or something. It's gonna be the highs and lows of the candle is this, and we had price sweep the high of the candle was the London high, basically a London candle. So we swept it. Okay, we swept it. The um candle. I mean the candle range theory tells us that we have this candle. Okay, we have this high and low. So I expect the second candle to sweep the low of this candle, and then see a third candle that takes the high of this candle. So basically, this is similar to what I saw today. Um, we had price sweep this, and we gave this 15-minute bullish candle. I don't care about all these fair value gaps in there. They are mostly the fake fair value gaps. So when I had this, didn't hesitate. I took this entry, SL right here. I mean SL right here and TP around 1 is to 3 or so this was basically the trade. Honestly, if I were a bit early to the trade charts, I could have taken even stricter like this one, a better or but I didn't take this. I took this one via the sweep. We had an SMT with the ES where ES took this lows but NQ didn't, which is good for NQ because it didn't form that lower low. And then we had this sweep into this round liquidity. I saw this round liquidity was really high probability, but I just took it out at this point. So what we had right here is we swept this and pushed lower. So this could be another trade in itself because we see the daily candles range of, I mean the daily range, we kind of swept it. Okay, if I go into 1 hour also I could say this candle is there, right? We swept the candle, came into this range. So basically if I were to mark this one and let me go to the 5. So basically we what we had is we pushed higher, we created this big bullish candle. Buys are, people are starting to get into buys, they want to be on the breakout trade, and then price swirls back in. So this is a really good trade confirmation, like something right here would have also even worked out. We came inside the range, that's when we know okay we are doing something. Then the my take profit would be this 4 hour fair value gap. I don't want to stay any longer, and this would be the break even because that's the candle range low. So something like this would have also worked, is what I'm trying to say. So that's one scenario that I need to take into look at and journal as well. Okay. So let me have this on my mind. Then I'll get into your USD. So coming into the market, mm, EU and GU, we had price previous day high. We kind of came into this daily fair value gap and pushed lower. So we could anticipate a price move lower. But the first drawn liquidity for us would be this 4 hour fair value gap. Because the 1 hour fair value gap is pushing lower. We have this 4 hour. Even if we want to be bullish or bearish, this is a really nice PDRA for price to go. It's a agreed upon drawn liquidity. So having that in my mind, the EUR and GBP is the closest high time frame drawn liquidity for me. What we had price do? See, again we had this kind of a candle range theory working out. So basically we had this big candle. Okay, we are not going to be looking at this lower candle because even though that's a valid, that's a pattern trade because I have nothing to take this long. I don't have a drawn liquidity. Here we have a drawn liquidity, and here we see price moving lower. So this is valid. Okay, this is what they call a kiss of death. This what we have in the London. So that's not for now because we see this. Okay, we have this candle range. Price sweeps it, price swept it and then pushed lower and pushed lower. Probably at this point of time or this 5 minute fair value gap, I mean 5 minute IF, which is where we might enter SL right here and take profit right here would be trade number one. It's trade number one, not trade number two. So this is trade number one, which is definitely possible because we have this 1 hour 1 hour candle and then the 5 minute previous. Okay, I mean 1 hour 5 minute turtle soup. Then we have this big 1 hour candle. Okay, let's get into this 4 hour. So basically we have this 4 hour candle, which is a strong, I mean 4 hour, which is strong level of interest. Then you see price pushing higher from this level of interest. So for bullishness, GBP USD was much better. What do we have in GBP USD? We have this 1 hour fair value gap. Okay, we had this 30-minute fair value gap as well. So basically what price did, price gave this candle, it kind of swept it, it closed below, but this is not the really good be to be honest. But when you come lower we have this candle range, then it's pushing higher. So basically we had 4 hour fair value gap delivered to the closest opposing PDRA. We didn't take any entry here, but this was nice to see. but I did mark out the charts for this one. Let me show you what that was. I mean, where's the charts? Chart scrolling. So basically, what we had here, 4 hour candle. Okay, sorry. So we had a 4 hour candle. Let me go back here. Let me go to 4 hour. We see we have this big 4 hour candle. We swept the low of the 4 hour candle and gave another clean 4 hour candle. Yeah, we have even marked this shit out. My bad. We gave a close, big close below. This is the point where, okay, traders on a short right now. We are closing lower. Okay, we are getting a lot of shots right here. Then price pushes up. Then IFVG, we get this 5 minute IFVG at this point, which could be our trigger. We enter right here, sell below here, take profit. With the first TP would be 4 hour, or the second TP would be this London highs. This is the drawn liquidity, and the previous day high was the drawn liquidity for me after seeing this kind of thing. And then it got delivered. And then in Australian dollar, US dollar, similarly, we had this 1 hour fair value gap, daily 50%. We actually did this turtle soup and then this candle range theory, and then push lower into this daily 50%. So basically, this was the daily candle, daily high. We swept, but this sweep didn't make sense because time is also very important at this point. The time says the London sweep the high, the London gave this big candle higher. So basically, this big candle is something what I want to see at an turtle soup. So because this is not just some regular sweep candle, it's a very big close candle, which is definitely getting a lot of buyers uh, to take a trade right here. And then price dump lower. We could even take an for daily we are take using 1 hour, right? So we see this big candle, and then we kind of push. When the next candle is up, we push back into the range. The second candle does this. Maybe a short right here also would make sense, make a lot of sense. Candle not, I mean, the daily 50% works. They didn't work at this area, but this 1 hour is the closest drawn liquidity PDRA that I could say. So that got tapped. Then we have 1 hour. We had this 1 hour candle sweep the low. Then we give another beautiful power of, I mean, the power of AMD or this candle range theory. We get this 5 minute inversion. We enter here. We long here. We take profit at this candle range high, but New Zealand was even stronger. So we had a even better entry at New Zealand, and then it delivered even cleaner. Then we had another really nice trade right here, continuation trade. 30 minute closed above. We had this 30 minute continuation candle. This is what I was telling you. The fair value gaps also really align with the candle range theory, because the third candle of the fair value gaps is a candle in itself, which should have its own range and it would have its thing. So we have this candle, 30 minute candle. We have this 30 minute fair value gap, that's our POI. We have this 30 minute candle range, the third candle of the fair value gap that you see here. So basically, what I want to see, price sweep the candle low and push higher. That's candle range theory perspective. On my perspective, on my older origin, I'm on my previous perspective. I wanted to see 30 minute fair value gap in price coming to this and move higher with the liquidity shape. So basically, the same thing. Both are kind of same thing. We get a sweep. We don't have any prominent PDRS to be scared against. So any entry, like even a 1 minute sharp turn or 1 minute IFVG here would work. But the thing is, I was watching that CRT video at this time, so I didn't look at this trade. And I wanted to see another kind of entry, but we didn't get that any point of time. Then price is now pushing higher. So this is also another scenario done. And then USD JPY didn't move much. I don't want to take a trade in this today. And then Canadian dollar, US dollar also. We kind of gave a really nice daily, but we were trading inside the daily range, so it was not that nice. And also in this, we didn't tap into this 4 hour. We kind of just edged it and then just went lower. So that's it. Today was really nice day. Candle range theory is applicable for my thing, and then it works, and then it's helpful to find what price is doing and filter out wrong buyers or wrong market occurrences or wrong breakouts. So it's really nice because you are having a higher time frame drawn liquidity main priority, and then the higher time frame candle as our contact, so it's really nice. And I am really happy for what's happened today. And today, this week has been really great for me. I'm hoping the same continues next week. I have to gather a lot of data in these weekends and make this weekend worth it. I need to gather data. I need to learn some time theory, and then also more CRT, and then re-strategize, reformulate, and then collect data, and then start executing, journaling, and do everything. And let's see. I'm really liking whatever that's happening right now, and we'll keep pushing forward.